Hey there, and welcome to another edition of Resources Plugged In, podcast mining and finance. Today we've got Andrew Pollard, who's the president and CEO of Blackrock Silver Corp, trades on the TSX Venture under BRC. Hey Andrew, how you doing today?
Very good. Thank you very much for the invite.
Oh, hey, thanks for taking us up on it. You've obviously been really busy the last couple of years, really turning Blackrock sort of around. Maybe you could give us before we get into all that, maybe you could give us a little bit of a background on who you are for some of my viewers who don't know you.
Well, listen, I remember being around conferences with you probably 10 or 15 years ago as some of the younger guys in the industry out there really just immersing ourselves in it. And my background is when I was 20 years old, I started a company called the Mining Recruitment Group, and I did executive search, building management teams specifically for the mining industry. And along the way, I've worked with everyone from pre-IPO stories about to list to some of the biggest mining companies in the world, like BHP Billiton, placed their head of their copper unit, for example, and everyone in between. I guess very young to be doing what I was doing at the time. I've looked the same age since I was about 14, which helped in terms of buying liquor. It also helped in terms of getting initial clients early on. People couldn't believe that. Most people just assumed I was 30 going in and placing CEOs for presidents, and it was CEOs, presidents, changing my boards, all that sort of stuff. But I just put one foot in front of the other. And that was back in 2006, I think, is when I started my company. Here we are, 2023. I moved from one side of the table to the other. I used all my connections. It's a small industry. I built out a little black book of some of the highest powered executives, working behind the scenes in the boardrooms, understanding what companies need to change. A lot of the time was building new teams. Some of the time was helping to companies pivot from, say, exploration to development to production, getting all key new hires in there as well. And the other times were turnarounds. And it was really those turnaround stories which gave me a unique laboratory to really put, I guess, my head to the grindstone and leverage all of that knowledge in what I've done with Blackrock over the years. Because 4 years ago, I came into Blackrock not out of inspiration but desperation. I was a large shareholder, very suffering shareholder, along with pretty much everyone else. And Blackrock really was an issue that I saw was a management issue. It wasn't a project issue. And I was able to come in May of 2019. We were trading at 3 cents the day before. If anyone was daring enough to put up a bid, and $1 million market cap. And week after that, I brought in a very, very high-powered head of exploration as our chairman. And then we went about rebuilding the board. And that was in May of 2019 at 3 cents. By July of 2020, we hit $1.60 on the back of our discovery hole. And here we are 3 years from that. And we're backstopped now by the highest grade large silver project in the industry right now that's not development stage. We just announced a resource update earlier in October of this month that shows our valuations now backed by 100 million silver equivalent ounces. And once again, these are the highest grade ounces in the industry right now for any silver rich project. And we're not in Mexico or Bolivia or Argentina or China or Russia, which are sort of the top silver producers. We're a 3-hour drive from Las Vegas on private land in Nevada. So, we've got a globally significant project on our hands, and we're certainly amongst one of the bigger takeout targets right now too.
Hey, excellent. Well, congratulations on that success. What's your market cap today? So you said you started around 1 million. What's your market cap as of today?
Yeah, we're right around $60 million Canadian right now, which really pisses me off. But I guess all things considered, it's been a wild ride. I mean, we hit all-time high valuation on the back of our first drill hole. That was a proof of concept drill hole. We hit in the order of 30 meters of about a kilogram ton silver equivalent,
Wow.
or call it 10 grams gold. And yeah, we hit $1.60 on that. Now, here today around 30 cents. Turns out we should have stopped drilling after that first drill hole. But, we're earnest people. When you have the goods, you ride it aggressively. And, we've one of the most active exploration stories in the silver space in the last few years. We've done 150,000 meters of drilling all in, and
Wow.
We've got the goods. So now, we're with that big re-rate to come. And I think that's going to be when the Fed finally starts weighing off the gas pedal on their hikes and people start positioning for the eventual cut. Gold and silver are looking really good here. I mean, assuming it's October 31st, we're doing this today. If gold closes above $2,000 today, that'll be the first time in history it's ever done that. So, we're patient. Ounces have been there for about $20 million, for 20 million years. They're not going anywhere. So we're just keeping things tight until the market turns. And right now, for example, our ounces are valued at about 50 cents an ounce. In a good market, those same ounces should be valued around $2.50 to $3 an ounce. That's
Right.
that leveraged call option nature of silver
Right.
and gold stocks that we're in right now. And that's really what I'm looking forward to. But it's nice to know that we're backstopped and we ain't going to zero.
Fantastic. Yeah, I think it's really good. Obviously, one of the reasons why I wanted to sort of have you on was twofold. I saw your resource update, and congratulations on that. That's fantastic to see your grades really hold up. You know, grade is king, as they say in this business. And what is also is obviously jurisdictionally where you're located. There's definitely a lot of operating in safe.
More
So
now than
that's
ever. I mean, that's what you're seeing. The world's as scary out there. I mean, mining's tough enough as it is. So having this up in Nevada next to a town is truly something special. I mean, there's very few projects that care about what commodity you're in that have the infrastructural and, I guess, rule of law benefits and the permitting certainty that you have from being on private land in Nevada. But yeah, things are looking good.
I thought maybe as part of the theme of the app here, we could draw upon some of your in the recruiting side of things. It was just, this year, the couple of that came out, I guess the famous one that people keep talking about is McKinsey survey that really ranked the mining industry as being the least popular or amongst the least popular career choices for young professionals. Um, Clearly, one of the things we know each other is, like you said, it's a pretty tight knit sort of group of people. How do you think we can, get this turned around? We can start getting some younger talent into the industry.
Well, yeah, having these, 10 years ago, I used to go on commodities report with Andrew Bell, and I used to do sort of these surveys as well. I'd survey my entire executive database on outlook, short term, long term, on their biggest pain thresholds, and it's talent, and mining is a very, in the sense that most people involved in it come from mining families. Whether my dad, he was a stockbroker. He forbade me from being a stockbroker, so I got into junior mining instead. But being in Vancouver, he did a lot of mining finances. Same with geologists. I mean, you see these families out, generation after generation of people, and they probably have this with their kids too. Whatever you do, don't go into mining. The issue with mining, is boom and bust nature of it. I mean, if you've got academically, would you put them in gas? Would you put them in mining, or would you put them in, industries that have the downs and you can really just chart a course linearly? Mining doesn't have that. They bring kids in boom periods. I remember in 2006, I was placing project geologists or geologists and mining engineers straight out of university with zero work experience. They were earning six figures right out of the gate. Some were depending on where they wanted to go, some were earning up. But then a year later, there were bartenders. I knew one that became a ditch digger. Like
Right.
it's yeah, exactly. So that's a big challenge. Now you've seen the environmental push over the last few years. I mean, but it's from people that know anything about mining. Part of schools get rid of their earth sciences divisions entirely because they don't think it's eco-friendly when everything is either grown or mined. I mean, it's something you either or you mine it, from the gypsum in your drywalls to the silver and copper in your phones to glass to silica to glass to everything. So people just think, oh, it's dirty. You shouldn't do this, or the earth. Okay, well, try and live with it. Spend a day in not using anything resource required. I mean, it's insane. So the industry does need to do a better job of selling the green aspect of it. I mean, to people, and sustaining nature of the industry. Without it, our standard goes back to the caveman era, right? So,
Right.
it is really embracing those. The issue that mining is twofold. One, the funnel at the front of people coming in it's harder and harder to attract people just because of the it's being seen as a dirty industry. The other half is you're churning people out very quickly. Once they graduate, they become despondent. It's just to get people over that first 5 year hump. And
Right.
then the major issue is that, the mining industry is on a demographic basis than most other industries out there. So you're losing this massive brain bank of knowledge, of talent. And the easy exploration is done. You're seeing the issue facing the industry as a whole is declining grades, declining discoveries. It's harder and harder exploration, and you're losing this brain bank of talent knowledge. People in their 60s, 70s, certainly their mind might be there, but they can't actually be there in the field to teach people, to correct them in the moment, to show them, what to do, maybe technology play a greater component moving forward. AI should help in terms of target generation and things like that. But yeah, it is a real issue. I mean, you're losing people and you're having less people on the front end, and you're churning them out in the middle with all of that. So I think it's the industry does need a better job of showing people that there is some security. The upside to that is, listen, if I'm entering the industry right now and there isn't all this competition, you can move up the executive ranks so quickly if you just apply yourself. The amount of youngs that are my peers, Galen McNamara, who's the Suma Silver, which is directly
Yeah.
adjacent to us in Tonopah, he's my age. His background's completely different than mine. He's a geologist. Now he's CEO and chairman of multiple companies. I mean, so you're seeing people move the ranks quickly, under 40 people. That's the benefit there. So there is, if you can bridge the gaps in the booms and busts, or if you can attach yourself to good projects that can always be financed, it makes it a lot easier. But the opportunities are really there to make a lot of money.
Right. Well, I guess it's been pretty popular for the last while to go into like big tech,
Right.
to go coding and work for some of the technology companies on software and things like that. We're
Well,
now
they're all
starting to
getting
see
laid
them.
off now too.
Yeah.
Same with
Yeah.
bankers. A lot of bankers were going into, sorry, a lot of, business students or even stuff were getting picked off by the investment banks. Now none of them want to work there either. I mean, try and bank that hasn't lost an analyst to go to the industry, because I mean it's even harder work. The hours are
Right.
crazier. So everyone's got the same sort of issues, and our generation, coddled to kids. Certainly, this next generation is. No one really wants to do anything anyways, and they want to work from home,
Right.
or they want to, you know,
Yeah, yeah, they don't want to field and have to live in a tent and
right,
things like that. Yeah, and but anyways, it's what from what you're saying sounds like a great opportunity, less competition, opportunity to move up the ranks, and that the industry itself should try to sort of the nature and yes, the decarbonization, the electrification of the economy, and just how
for
important
sure.
and critical these minerals are. And as I guess the mining technologies and mining processes have also sort of modernized a bit, so not be as dirty as it once was.
Right.
Am I accurate in that statement?
Oh, for sure. I mean, Robert Friedland on just the underground nature of some of their operations, and he's saying, you can own mines with, with effectively remote. A 20-year-old could be taught how to use an iPad, and you're actually handling it's the technological evolution in the. You'll see some pretty spectacular breakthroughs in the coming years. AI. For regional computations, data, all of that's becoming easier. For resource modeling, the software and technologies behind that are improving greatly. So, it does require you become more efficient. You can't cut corners. There is always going to be a need for competent, well experienced people, and that is going to be a real issue, because these are labor intensive projects, and you know small exploration companies, and then the bigger the company go, obviously you need lots of employees. So exploration companies have different needs than developers that have different sets of needs of producers. And it's really want to be on that scale, because different opportunities are involved in all of those things. but the potential to move up quickly is probably better now than it's ever been. If you're looking to get in the industry, for sure, just because you've got the silver tsunami of people that are poised quickly moving off.
Right.
And so it is good, but you do need to have a certain uh, appreciation for volatility, and you need to be a good planner too, because there will be some dry months.
Right. Well, hey, excellent. Thanks very much for maybe we can sort of back into what you're doing at Blackrock Silver. So you talked a little book that you had from years of building the preeminent recruitment, which is how we originally years and years ago. Were you able to use some of that little black book with helping build up Rock?
Yeah, well, it's nice. This is the first ever actually stepped to this side of the table. So running a company, and as I saw it, a company issue or project issue, it was purely a management issue. No one really gave. And it was board. The CEO was a part. He had no skin in the game, and dilution wasn't a concern. The concern was just how do you get your every month, and didn't care about a project. So you know I saw a sort of opportunity. Not only did I have a lot of money into the company, but a lot of my clients at the time saw my enthusiasm about the project that BlackRock had just signed a deal on in 2018 called Silver Cloud. It was a grassroots project. I knew the guy who staked it. We still have that in our portfolio. And it just seemed like such a prospective project that had never really drilled or owned by a junior mining company before. And I wrote a $100,000 check into it in 2018. It was my biggest check I'd ever written into a company before, but it's a little embarrassing because the headhunter, my entire business was the notion that management matters. Well, I didn't really look at the board. So I deserve to have it turn into a disaster. But my clients have followed me in. I had people like Steve DeJong from Integra Gold. They were
Yeah.
clients of mine at the time. They wrote checks into it too. I had Gren Thomas, and Gareth
Yeah.
Thomas, right? And they, 6 months into it, the stock's just circling the gutter, about to go down the drain, and they're like, "What the hell?" So I felt the need to step in, and it's nice that what I was doing for 15 years previously, building teams, management matters, charging a lot of money for what I did, wasn't bullshit. Because in the span of just a few months, I brought in the former head of exploration for Placer Dome. The guy's found 100 million ounces of gold in his career at that point, and they were the movers and shakers in Nevada. In fact, he was the president of the Geologic Society of Nevada. I mean, this guy's name is Bill, executive chairman.
Yeah.
He was a great hire because what? I joined at joined a week later. We were 10 cents. 6 months later, we were in the 30-cent range. And then the world shutting down. We went from 3 cents to 37 cents down to 7 cents in March of 2020.
Wow.
In that big washout. I didn't really have anything to show for it other than a really, really good team. And it was a miracle it happened. But Bill, in January of 2020 at the Cambridge show, brought an opportunity to me. And that opportunity was Tonopah West, the consolidation of the Tonopah Silver District. It was the first time that anyone had consolidated this land package since production shut down at the emergence of the Great Depression. He says, "Andrew, you got it. We got to look at this. We got to get it." So I built a team, and importantly, I listened to him, because by the time we got that deal done in April, the world started slowly opening back up. The markets got back up. We went from we raised money at 20 cents in June to fund a small pre-drilling round, and by the end of July, hit on our first drill hole, and we were $1.60. So between
Wow.
March of that year and July, we hit the $1.60. And I mean, we traded 40 million shares that month. The day after we hit that intercept, Eric Sprott called us and he financed us to keep going. A year after our first drill hole there, we had First Majestic Silver come in as a strategic investor. A year after that, we put out our maiden resource estimate, which showed just, it established baseline credentials for the project. We went into the SIL ETF. We're the smallest entrant in the SIL ETF, which is the largest silver ETF
Right.
in the world. And here we are 3 years after our first drill hole. We've drilled out 100 million silver equivalent ounces. That's just silver and gold. I mean, you process this, it's silver, gold, and beach, what you're left with. And it's at the highest grades of any project in the industry. And we've now got a clear path forward. I mean, Early on, I was saying the upside for the project based on what we knew was about 100 million ounces. Well, we've got that now, and now we've got a clear path with significant gaps in between our various deposit areas, which are all part of the same system that have yet to be infilled. I mean, you can substantial more upside there, but grades we've got and all the jurisdictional advantages we've got, this should be a very high margin operation. Our cutoff, our average grade, block diluted graces is well more than double our cutoff grade, meaning, you should be making money hand over fist there.
There's a little bit of a tie-in on like lithium as well, if I'm not mistaken.
Yeah,
I know you're called Blackrock Silver, and you're already focused on your Tonopah Silver District in that project. But then you got a little bit of, I guess, foray into some lithium projects. You could give just a quick one on that, and I think you
yeah,
got a joint venture partner or somebody who's sort
yeah.
of advancing that along for you.
Tonopah itself, it's a very, very famous silver district. It's the reason why this and the code are the reason why Nevada, when you go on the highway, it says "Welcome to the Silver State."
Yeah.
So Tonopah is the second largest silver district in Nevada, Comstock. Um, but what's emerging recently is that we're actually right next door to some of the largest lithium resources in the entire world. The only actual producing lithium mine in America is about maybe 30 miles from us. That's a brine operation run by Albemarle. But right next door to it it's like the breakthrough of the Carlin trend in the 1960s. It's a breakthrough in recovery technologies that allow these claystone deposits to be exploited. So, in the 1960s, these tonnage systems of Carlin Trend, no one knew how to process them. And then all of a sudden they did. And you have these monster pits, 30, 40, 50 million ounces, all in operation pumping gold. Well, the same things happened about in the last 10 years in terms of figuring out how to process lithium claystone. And when you can do that, you get all of these projects which previously just weren't feasible. Now, massive resources. So we're actually right next door to a company, American Lithium. They've got their TLC deposit. They put out a PEA earlier this year, which had a base case of $3 billion NPV, and they had an upside case when they brought in some of their other commodities in there, um, showing a $5 billion NPV. For them is a battery, which I think is the largest lithium resource in the entire world. And then there's us. Now, our original land holding in Tonopah was private land. It was the patented claims that we consolidated. These were mining claims that the old timers were working on. When we got that, we figured, okay, well, we had this idea that our vein system was going to start curving up to the northwest. And we staked all the land around it through the BLM that we could, about another 20 square kilometers, thinking that silver and gold would go up. Turns out it does. We did have a breakthrough in the sense that we are tracking our system heading right up in that direction. But we did some scout exploration drilling up there last summer in search of gold and silver way up north on these claims. No one's ever done any drilling up there. And we didn't hit any gold or silver, but every single drill hole hit lithium. And that attracted a lot of interest. We had lots of beating doors to do joint ventures on it. We did a deal with a company, Tierlac, which has a really, really deep technical bench with their QP used to be head of Rio Tinto's minerals unit. Know what they're doing with these deposits. And we signed a deal with them where they're going to spend money. We're only giving them surface rights, so surface down to 200 meters, because we still think that there's highly prospective for gold and silver up there. And we've got a joint venture established where they have to earn into it by spending $15 million US over the next 4.5 years now to earn into 70%. And they did a round of drilling after we did this deal. They did a core holes, and they've drilled out a 7.2 square kilometer area of lithium right at surface. So it's cover rock for us, and comparable to the next door American Lithium. There's going to be significant tonnage there at grades very, very comparable to this. Like I call that the sort of cherry on top.
Wow.
Going
Very
on
cool.
with the whole green push. I mean, silver metal at this point, it's obviously the solar panels just requires it. but lithium at surface and silver is a very unique proposition to have, especially um, especially just where we are in the world. I mean, General Motors just wrote a $600 million check into another Nevada lithium company. Tesla, that's opened their factory just outside of Reno, about a 3-hour drive from us. I'm sure that would love to have resources like silver and lithium as well. So it's a very unique situation we're in. For us, our focus is just advancing our project and tiger by the tail there. We've got a clear path now, I think, to add a lot of ounces and fill in the gaps on our resource to do one last push on the drills from surface and put a PE in it very, very quickly. But, at 100 million ounces, what the world can see is that, this is already standalone. I mean, we don't need to find to look at, building, but we know there's a lot more ounces there. And economics are going to be wild. So the next couple should be fun. And all we need is Powell to lay on the gas pedal from the from a Fed point of view, and I think you'll see this come back in.
Yeah, I think timing is really good for that. Obviously, I remember like sort of 2008, and it was a fantastic time. 2009 for the next couple of years was a fantastic being in the resource. So interest rates, like zero interest rates, and lots of opportunity looking to speculate in places to get alpha and current demand, especially gold. Went on a heck of a run. A lot of people don't remember that precious metals like gold and silver actually didn't have a very good year in 2008, because when we had sort of the meltdown of everything, of subprime, it was everybody was selling everything, looking to raise cash, and it was a liquidity crisis. So it actually performed really well during a recovery. We've got a little bit of different play this time around, as it's not as clear cut whether we're going to have a sort of bubble sort of burst. We'll certainly and other precious metals perform wildly in rising interest rates, and do what they've done. But the better time will be when the pivot comes, and at least they don't keep rising. I think we're a little closer to that than a year ago.
For sure.
Very good timing. And in terms of Tonopah West, which is I think where your silver deposit, it's kind of often described as the highest grade, one of the highest grade undeveloped silver projects. Kind of elaborated a little bit on some of the steps. Maybe you could just kind of cover those once more for the viewers in terms of what you're doing to take this to a potential production decision.
Yeah.
What steps would still be left at this point?
If we're the nice thing about silver versus other commodities is, there's lots of pretending to be silver mines. There's lots of poly pretending to be silver mines. This is a silver. When we say silver equivalence, it's just silver with the pesky little byproduct of gold. And it's about 50, depending on the silver price, it's about 50-50 on an in situ metals basis, which is really, really high. That makes us interest for is not just silver companies. The Lane district hasn't been hotter since the early 1900s. I mean, Centerra didn't spend $200 million to buy a project, US, about 15 miles along the highway. Anglo Gold came in, they're probably in it for about over $1 billion on their consolidation of the one town over from that, called Beatty. And given, the high grade nature of our deposit, there could be synergies with these. Those are bulk tonnage open pit sort of operations, but they have high grade potential. Well, either which way you look at us when we're looking to develop the project, we'd have a mill on our property, and the permitting process, being on private land, what that means is you have an expedited, because you don't have to deal with the federal government on anything. It's just state and county things. So what I'm getting at with that is saying that if we have a big mill set up and we're feeding it our ore, but the project next door or the projects close to that have high grade material too, maybe they buy us to process their high grade stuff too, and then they can throw the rest of the stuff on their heaps. But obviously, in the silver world, as high grade stories go, there's really only three at the point that are of critical mass. It's us, Vizsla Silver, which have done a hell of a job, and Dolly Varden, which has also done a hell of a job up in the Golden Triangle. And then there's a lot of these big bulk tonnage ones, down in Mexico or down in Argentina or Colombia or places like that. Which are completely, we think, on a sensitivity, like our deposit, not sensitive to gold prices. And when we technical report, I think that's something that people are going to really, really pick up on. But, you know, this any mining, look at what Mexico's, the issues having to operate in Mexico with the labor. You saw
Right.
Pan American had to shut down their La Colorado mine because it was overtaken by bandits, like they were trying to get robbed. In Peru, you've got challenges and just all that sort of. Also got the peso running really hot, which cuts into miners' profits. Every single silver company in the world would want to be on private land in Nevada with a project like this. So we think we've got a huge target on our back from a takeout perspective, especially showing that this will be a large operation. Like it already is going to be a large operation, but you can infer significant more ounces. So the forward there is simple. We think on a little bit more drilling in relation to drilling it's taken us to get to where we are now. We can add a significant amount of ounces. It's just doing infill drilling, connecting one deposit to another. We've got 3 deposit areas laid out across a 3 kilometers trend. Well, it's not 3 deposits, it's a vein system and it's all the same. So if we close those gaps, really low risk drilling, we'll be able to add a lot of new tons very cheaply. We expect to be able to do all of that at some point next year or whenever it makes sense to get the drills back. In this market, I don't really want to do a big raise because why bother if drill results or resources aren't getting priced in? What I see as my big challenge and opportunity over the coming months is a month ago, prior to our updated resource, our ounces were trading for $1 an ounce US in the ground. That was the highest ounce in the ground valuation in this as silver rich deposits go in the industry for development stage assets. Now, even though we've gapped up a little on the back of our resource, we added so many ounces that our ounce in the ground valuation is down at like 50 cents. Our peers are trading for 90 cents. We're higher grade and in a much better jurisdiction than all of them. We should be commanding a premium. I'm not going to do a big push on the drills until our valuation, that gap is closed. And that's my job. So we're filing our technical report in early November. I'm heading off to New Orleans this week to go to the New Orleans Investment Conference down there. After that, I'll have one night in my bed over the next 3 weeks. I'm going to be in Toronto, going to be in Europe and in Zurich and Germany and London,
Nice.
getting in front of investors and institutions. At the same time, I'm going to be speaking with all of the corporates, and we've had a lot of inbound interest there on potential strategic opportunities. And we'll wait and see what the outcome of the Fed meeting is this week or in the coming days. And if we'll see what they telegraph. But if they telegraph that they're done with hikes, I don't think $2,000 is the ceiling for that. Becomes
For
a new
sure.
floor as people position that. And, whether it's one more hike, whether it's this meeting or December or January, what this means for investors is the last tax loss season you're going to get in this economic environment. We're a great tax loss candidate this year. I don't like it, but I understand it. These opportunities don't last for a long time. And all I can say is if everyone else is 90 cents and we're trading for 45 cents and our ounces are higher quality, I don't need silver to run to 25 or 30 or 50. As long as all things being equal, we're poised for a massive re-rate very quickly, all other things being equal. And after that, if the markets do start grinding upward, if you start seeing, the other feedback I've gotten from discussions with corporates, I was at Beaver Creek in September. They finally have a mandate to do premium deals. They're looking at this. They're seeing the depressed prices for valuations right now, and there's so few actual silver assets of quality in the industry that I wouldn't be to see actual premium deals happen very quickly because and it'll take one shoe to drop for there to be 2 or 3 or 4 in quick succession. And I don't want to be the first premium acquisition, but I wouldn't mind being 3 or 4 there. And when things happen, that'll get the speculators coming in with the fear of missing out, and you'll see valuations move really quickly. So, the opportunities like this won't last long. Silver's more hated now than any industry other than oil and gas was years ago. And you saw what happened then. So,
Yeah. I'm not sure if you follow Mark at IKN. He's got a pretty funny Twitter these days. But further sort of resource update, you just put out a calculation.
Yep.
Is that a priority sort of for to sort of upgrade it through some of that?
Yeah, we've got some priority areas that a little bit of drilling will go a long way, both from an adding new tonnage perspective, but also, that would have a very positive consequence for a PEA that we'd look to do. It would, we're looking at ways now that we already know, given the cutoff grade versus our should be a very, very high margin endeavor we're onto. But some areas we can drill out further with a little bit of drilling that will see us have a positive consequence for both payback periods and for IRR. Yeah, we'll do that. We've got internal scoping studies underway now, for to follow on this last resource we just did. We're going to be out getting in front of the corporates and the institutions that will really be able to needle and maybe be the value added investors and take us to the next level.
Typical day look like for you now this in this role, moving Blackrock Silver forward?
Well, it's obviously you got the high stuff. I mean, you're on the vision of the company and making sure that you have the right team in place. It's always been, with us, it started out, it was management first. Management matters. We got the board. We've got a high-powered board I built with, the chairman of Fortuna Silver's on our, Andrew Pollard is on our board, who was the top analyst in the world for about a decade straight. He ran their when he was with BMO. I've got an ex-banker on the board. I've got the former head of the Association Mineral Exploration, Tommy, on our board. So from that perspective, we've got the right puzzle pieces in place to drive the company forward perspective. My job is to make sure the company's capitalized, to make sure investors know what we're doing and we're speaking to the right investors. And my other job is to free up time so that my chairman and head of exploration can handle all of the operations on the ground. So I do what he doesn't want to be doing. So, a lot of it is just, in front of investors. There's a lot of travel. Obviously, you get the bullets in the back, arrows in the back when things don't go as planned. Things do go as planned. I probably get more credit than I really deserve. I mean, but it's just to free up time and make sure everyone's doing what they're supposed to be doing. It is a fun job. I mean, good market or bad market, knowing you've got the goods project level position, that makes sleeping a hell of a lot easier at night. I mean, there are a lot of things outside of your control, but you learn to play the hand you're dealt in which case we've been dealt a pretty good hand because, there's been volatility all over the map in the last couple of years, and I get that. But the volatility had in that first year from 3 cents to 37 cents and down back to 7 cents, pre-discovery, that was a hell of a lot more scarier than it is now, going from, sitting at 30 cents, backstopped by 100 million ounces. I know that we're not going to zero. I know the cure for low valuations is low prices and low valuations, because it just means that the target on our back is bigger now versus other people.
Right.
As a takeout perspective goes. So, just really getting out there, telling the story, being the face of the company, and waking up, you eat enough shit over, you learn to enjoy the taste of it. I've eaten a lot of shit over the years, but, when it comes back to eating, I'm going to enjoy that even more. So.
Hey, excellent. So what's for any aspiring people that are new in the big seat reins of a company, or thinking they want to lead a company from a president, CEO, board level? Do you have any? What are a couple of things you learned? Since sort of swapping hats and getting into the seat. There are a few things that you kind of knew, or a couple of things that you're proud of that you've been able to learn on the job.
Well, you have to, from a high level perspective, you got to, you need to be able to tell a story. You need to be able to handle massive amounts of volatility. Lots of people just aren't able to do it. And I'm not saying that from a academic or technical understanding. Out there, it's tough out there. I mean, certainly in the era of social media and the era of bull boards. I mean, I've been everything from celebrated and on to, but you wake up and you do the right thing earnestly. You have skin in the game. Otherwise, you don't care, right? I am one of the largest shareholders of the company. I live and I can tell you the trading of every single day in our stock prices, what's happened, and I can go back 3 years and say this was that day, this is the seller, this is. But you also realize that you don't have control over 90% of it. We've executed really, really well. We've built a right team, all of that, but our share price is depressed along with everyone else. In some cases, more depressed. But what does that mean? Well, the big picture is it means that the opportunity is now greater than it's ever been for us as a company. We have the goods. The pendulum has swung to undervalued again. I've been presiding at times where the pendulum swung to overvalued, and you're like, shit, I'm not. It feels good, but you're not really comfortable because now I know, the pendulum swung, and I see the future, and the future is very bright. So need to be able to tell a story. You need to be a good public speaker. You obviously need to have a business understanding and be able to build teams and get people to trust you. And skin in the game is also important too. But doing the right thing and being earnest goes away. And no one can. I've done a lot of things over this time. The first thing I did when I was CEO of Blackrock canceled the 5-cent financing that the old guys were trying to do. I said, you're going to kill the company. You're going to dilute the company. It's not going to get us anywhere. So I canceled that financing at 5 cents. I self-funded it out of pocket for a month or two. And then we raised money at 10 cents. And I put 100 grand into there too. In hindsight, I should have done the 5-cent deal myself, but you do the right thing, right? And had I not done that, we would have had a huge float right out of the gate. We wouldn't have been what we want to do. So here we are. You got to wake up every day and just try and put one foot in front of the other and deal with the uncertainty. But I think we're nearly there for investors. Yeah, I mean, this is, as I said, probably the last tax law season we'll have in this economic environment. And this is the cycle on a percentage basis in history. You've lived through this. We've all eaten shit along the way. But, get up and tomorrow's a new day. And when it happens, the volatility, the leverage call option nature of the business we're in, things happen quickly. And when you start chasing it, you're not going to be able to get in. So get your positions now. Obviously don't overextend yourself, but it's 6 months from now. I think we'll be looking back on a different environment.
Excellent. Hey, just to wrap up, what are the top 3 to 5 reasons why somebody should consider owning Obrux today?
Yeah, well, we've hit critical mass. We're grade. So we're, at these, it's going to be a margin operation any which way you look at it. In Nevada versus Mexico is the number one producer by a country mile for silver. Peru and China, 2 and 3, about neck and Russia, Bolivia, all these places. None of them are private land in Nevada. So what does that mean? We've got a clear bad ounces. We're one of the top takeout targets in the industry as I see it, and as many analysts have said it too. So you could see something happen very quickly on that front too. Grade, it's big, private land. We don't have to build roads, move power lines, build man camps. We're literally like ours is on top of a king. Actually, it truly is. There's a Subway sandwich shop right to that. There's a brewery. Really,
You've got some infrastructure.
Yeah, so those will have positive consequences too. So we've got, I think every company in the world would want to have, and a lot of the old companies would want to have it too, because people ask me if, what my favorite is, gold or silver. It's neither, it's green, because that's what it is. When an economic analysis comes in, when you're mining it, you're processing both. Actually, that's another point too. Because it's silver and gold, the metallurgy is really straightforward to process. We don't need concentrates. We don't need to do any of that. It's just silver and gold at really, really high recoveries. And there's no issues there. Why? Because the old timers produce nearly 2 million ounces of gold and 200 million ounces of silver from the same rocks.
Hey, fantastic. Hey, Andrew, thanks very much for your time.